think most of you know probably who I am. Just maybe very briefly, I work for DVB Bank, a solely dedicated bank in transportation, and I'm basically in charge of the Asia Pacific aviation business. I think you were quite lucky to have the last 2 days hearing really impressive presentations from the good guys. Today you will actually see a presentation from the bad guys, because the banks are the bad guys in this business, and we still continue to be around, even though at a much reduced number. So basically what I want to introduce you to is really the subject on where's the money coming from. It's a multi-billion dollar business. I think this year the deliveries in terms of value will amount to $77 billion, and that's only basically the start of what is expected for the next coming years. Yeah, in terms of just very basic background, we still see the airline industry in specific in Asia performing reasonably well, even though we are seeing now signs also of deteriorating financial performance, primarily actually through fuel prices, but probably also some effects from slowing down in exports into the traditional European and US markets. The Asian markets still contribute a large majority to the profits of the airline profitabilities, but we are seeing definitely a decline, which is shown on the slides. I had to borrow the next 2 slides from Boeing, but I think they're actually quite good to show where the money is really coming from. For the people who don't know this slide, basically there's a traffic light system which shows you which sources are available or expected to be available, and which sources are expected to be reducing or even being unavailable. We have seen that after a reasonably good year in 2011 and 2012 to a lesser degree, 2013 is expected to be much more problematic. And the traditional main sources of funding, which are basically export credit, commercial banks, and to some extent lessors, are looking less good than they looked actually this year. And we do expect some increasing tension coming from there. Okay, this one is also from Boeing. It does show you basically the amount of deliveries for 2011. And if you look on the right bar chart, that basically shows you the composition of who funded what. And you see a substantially, not substantial, but an increased percentage of lessor-funded aircraft deliveries. This is a trend which has been seen for the last couple of years. I think a couple of years ago it was probably more in the 20s, low 20s. It's now 30%. That number is also important for something I'm going to talk about later. But the right bar chart is slightly misleading, because the lessors, they don't fund necessarily all from their own cash. The lessors also need money, and this money has been provided actually to a large extent actually by export credit agencies and also commercial banks. And therefore the left chart is actually the more relevant one, which shows you that really the entity, the man who came to rescue really last year, and I think the picture will not be so different this year, we can ask Foster later, is really the ECAs. A development which is also going to affect funding going forward is really the pricing for ECA and EXIM Bank. I'm sure that most of you are aware that the ECA pricing follows a certain mechanism. A new mechanism has been introduced called ASU and will take full effect in 2013, and will effectively mean that pricing will almost double for most of the airlines. And this, what you see on this chart, shows you basically the pricing grid as of now, for available ECA funding, and that is only the ECA pricing itself. So the ECA premium, which is payable directly to the ECAs and EXIM Bank. Over and above this pricing, you actually have to add liquidity costs of banks. So banks have to fund these loans as well. And I think the minimum liquidity cost for long-term funding is probably going to be around 100 basis points. So you can basically add to what you see as per annum spreads, 100 basis points as a minimum. So that it gives you a bit of an indication of where pricing is at the moment and where it will look from next year onwards. So this pricing, just to be clear, is not effective yet, but it gives you an indication of what it will be next year. And we can say, because we do this every day, it's very close to what we would actually lend on a commercial basis. DVB itself, for instance, we actually don't lend on a ECA or EXIM Bank basis. Maybe just one more point. I think if you look at the credit ratings, you will probably see that not many airlines are in the top end of this grid. The majority of the airlines are probably more in the double B, single B category. So that is what you can probably expect for banks, for airlines to come. Okay. This is a slide which I added because I thought it's quite useful to understand how actually availability of financing, liquidity and so forth actually has affected aircraft values and the ability of airlines actually A, to order aircraft and B, to finance them. And effectively what this actually is supposed to show you is that by having excess liquidity available from various sources, a lot of people in the market, I'm not going to finger point anyone, have been able to really sell aircraft, finance aircraft, and really give aircraft values a boost. The question is, and it's also a question maybe for later in the panel discussion, is that really sustainable, and is that actually reality? Is that reflecting reality? I think we saw probably some of these slides already yesterday. This is just an overview of the outstanding order book. It's a massive number of aircraft. What I find most impressive on this slide is really the amount of NEO orders, because it's almost, it looks like almost 75% of the CEO orders, A320 orders. And it just tells you that there must be some friction coming along the lines. Obviously, the 737 new generation order book is also quite impressive. Just looking at the delivery numbers, we have not reached the peak yet. The peak is yet to come, and according to our database, it's coming next year, and it's about probably 60–70% more than what we saw this year. So it's going to be interesting to see how this will be financed. And will not stay only there next year. It will only really come back to the levels of this year in 2017 or 18. Okay. This is just to show you also a bit how all these deliveries are affecting actually Asian airlines. We did this calculation recently at DVB, and what we found quite interesting, this is only for 2012, basically as of today, and then until 2013, end of 2013. And what we found is actually that the 50% of the concentration of the orders actually is really quite high among the top 10 airlines in Asia. And obviously there's some good things and bad things about this. I mean, as bankers, we always look at the bad things. And obviously, if one of these airlines were to go away, there would be considerable risk. Most of these names are, of course, quite good, so we don't expect that to happen, but there are some airlines which may be under some pressure at the moment. This one is also quite interesting. We just thought, okay, how many airlines in Asia have more than 50 aircraft still outstanding for delivery? And it's 18. If you add all these orders up, you will come to a number of more than 2,000. This is really amazing. I mean, we thought this is quite an impressive number. Obviously, the order stream goes all the way to 2026, so you can probably argue, are all these aircraft going to be delivered? Probably yes. Probably not all, sorry, but a substantial amount will be delivered, but just the sheer number is quite impressive. And also the concentration again around some of these deliveries is noticeable. We did the same calculation just in terms of country allocation. Interesting to see that Indonesia is now number 2 in this order book. China, that I think not really a surprise. India is falling back and will probably fall back even further. Some of these deliveries, orders, which are included in this calculation are from Kingfisher, and I think it's fair to say that not many more aircraft will be delivered to Kingfisher. But the Indonesia part was quite interesting, largely of course caused by the Lion Air order. This one is also quite interesting, just to see the impact of low-cost carriers, and also in line with what was being discussed over the last 2 days. Even though I think we heard a number that the impact of low-cost carriers on a worldwide basis is still around about, I think it was 12% or maybe 20%. In terms of orders in Asia, it's amounting to close to now half. And this is only a trend which will probably continue. Slightly different topic, also relevant, we believe, for aircraft financing and availability. There's a discussion going on about over-ordering versus overproduction. We didn't know how to really present this here because there's not so much data available, but what we thought is we give you this chart, and basically what it shows you, the amount of which aircraft types are managed by the source and the percentage of the global fleet. And the reason we're saying that is because over the last couple of years you have seen orders, substantial orders from airlines and substantial orders from lessors. So the question is, all these orders from lessors, where are they going to place these aircraft? The operators are airlines. So the real question is, can this be sustainable? And the additional element on lessors, I don't want to finger point to lessors here all the time, but is obviously with lessors, the turnaround of aircraft is much higher. Aircraft are leased normally for shorter tenors, between 5 and 7 years, and then they have to find a new home. When an airline buys an aircraft, it will probably operate the aircraft for 10 or 12 years. So there's a higher turnover, so the aircraft come back to the market more often. So what that means is there's constantly more capacity coming back to the market, and that creates some tension. And within DVB we have kind of determined a threshold amount where we say if a certain aircraft type is managed by the world population of that aircraft type is managed 50% or more by lessors, there's a high probability for more tension and volatility. It will be interesting to hear also the opinion of the lessors in the audience. Yeah, so basically just to summarize the challenges I think for aircraft financing, to be very clear, huge delivery stream, which we'll see for the next 3 to 5 years, and only then they will actually start coming down again. The point which I just mentioned, over-ordering versus overproduction, and that's also a topic which may lead to more pressure, more probably on second-hand aircraft, but we're seeing also on new equipment, in particular the A320, which is managed, 50% of which are more managed by lessors now, based on the world fleet. So that is going to be interesting to see. The cost of EXIM Bank and ECA is increasing from next year onwards. The problems in the European and US banking markets leading definitely to a reduction in available financing. And one point which I haven't mentioned yet is all the regulatory hurdles which are being imposed on banks in particular. And all of you have heard, I'm sure, about Basel III, but there are actually many more smaller regulatory hurdles which are being imposed by regional or even domestic banking regulations, which are not so visible but which are increasing the cost of the banks. So just with that actually at the back of our minds, I wanted to actually now ask the panelists to come to the stage. And why don't we start with Anup Mysoor, who is actually on his BlackBerry. So he can actually put his BlackBerry down. Anup is Managing Director of Citibank in Hong Kong, has been in the business for 20 years over, I guess. He doesn't look like that, but he has. And expert in a lot of areas, all around aircraft financing. Then Foster Arata, in charge of Boeing Capital in Asia Pacific, Managing Director, and making sure that what I was trying to tell you, looking or sounding actually so negative, is not going to happen. And Brian Hogan, Chief Executive Advisor for Zest, and having been also in the business for quite some time. I'm not going to mention how long, because otherwise he will ask me for his age. Welcome. Okay, so I will start the very basic question, which I think is almost a $1 million question to Anup. Where's the money going to come from? We have, especially in Asia, a whole range of, let me just maybe put up the next question. Okay. We have in Asia in particular a whole range of banks. We have regional banks, Chinese banks. Chinese banks sometimes come onto the stage and then basically invade the whole market. Then they leave again and leave the arena for us. We have lessors, we have still some commercial banks from Europe. Anup, tell me, what do you think? What's going to happen, especially from next year onwards, when we definitely expect the ECAs to reduce the activity?
Thanks, Vicente. To counter the comment on my BlackBerry, I was listening to what you were saying. So, if you go back to one of your early charts showing Foster's breakdown of where the money came from in 2011, we can look at where it comes from in future. And
is it possible? I think that's the slide number 3 or 4, the colorful one. Yeah, this one.
No, the one which has got the stacked bar.
Okay, the bars.
The 77 billion.
Yeah. Okay.
Right.
It's too quick.
If you, oh great, we're at arrivals again.
Okay, time out.
It was. It was the bar chart.
Yeah. Yeah.
Okay.
Okay, thanks.
If we look at what happens 2012, 2013, 2014, doesn't really matter, but in the next 3 years, you basically see that 77 billion becomes 100 and something billion, somewhere around 100 and 110. So whatever we saw last year was extremely conservative. It's only going to get worse. Is the volume which is coming from the commercial banks, you've got it there at 15 to 20 billion, going to increase? I don't think so. So that's going to remain static. Is the amount of volume which is coming out of EXIM and ECA going to increase from 25 billion? I think the EXIM and ECAs would probably want to get well below 20, but let's just assume they stay at 25. So I've got 40 billion for you, and even if we assume everything else stays equal, and you've got the same bar chart with the same dollar numbers for next year, you still have a $25 billion gap. The manufacturers represented here with one, so 50% of the capacity, are both going to tell you that there is no funding gap. They've never delivered an aircraft which has not been paid for. Absolutely true. So there is no such thing as a funding gap. And so what we're missing here is $25 billion. And that $25 billion is represented by a very skinny line in that bar chart, which is the capital markets. So will the capital markets deliver the 25 billion? They'll deliver a lot more. They will replace the commercial banks if allowed to. But that capital market bond money is available to the airlines and the lessors who will get themselves rated and will go and access those funds. To date, we only have 16 rated airlines. 9 of them are US airlines. So we have a very small universe of non-US rated airlines. And we have a very large universe of rated lessors. And so the lessors have been in the markets. They have been tapping those bond dollars, and they've been tapping them in very large volumes. So the lessors have cashed up, they've got equity, they've got access to the bond markets, and so they will plug that gap. So the percentage of deliveries in the next 3 years, which go from being directly financed by the airlines, will be now directly financed by the lessors, and they will increase their proportion of financing. Is it efficient? Is it not efficient? I think from a financing perspective, it's as efficient as it was last year. But will the airlines then change and get themselves rated? I think, as you've seen, and you mentioned, are airlines going to be investment grade? Most of them are not going to be investment grade. They've got to get comfortable with that fact. Many of them are not comfortable. But they've got to think of it in a different way. The airline rating plus the value of the aircraft collateral is going to be an investment grade bond. And that's going to be very valuable. And I think more and more airlines will take advantage of that, issue EETCs, aircraft secured bonds in the market, or they're going to cede aircraft financing to the lessors, which is a good thing as well.
But then let me ask you, Anup, a very good answer. What about pricing of these bonds? Because especially in Asia, I'm sure that you are aware, and most of people in the audience, people are very price sensitive. What will the pricing of these capital market bonds actually look like?
If we go to the very difficult slide which you had on the EXIM ECA pricing, you were right to point out that EXIM ECA pricing BB type airline is going to be 200 basis points per annum just for the EXIM premium. Add on to that the liquidity cost. You mentioned 100 basis points for liquidity, could be higher depending on the agency. No, I don't think EXIM ECA financing is cheaper than 350 basis points. Okay. And one thing which you didn't mention was risk mitigants for a BB airline. Risk mitigants for a BB airline basically mean that this could be 75 or 80% loan to value. Airlines have got to put up 20 to 25% very expensive equity. So are the aircraft secured bond markets going to be competitive versus 350 to 400 basis points, 75% loan to value? Absolutely.
Okay. I think we need to also hear Foster on this.
No, I think a lot of Anup's comments are spot on. Quite frankly, there's a fundamental shift going on, in part caused by market circumstances in the financial community as well as the production rates of the manufacturers. Having said that, I think the realignment that's going to occur will satisfy the demand. The money will move. It will be repriced. People will have to work harder to get it, I believe. The way that we fund aircraft will fundamentally change. This year alone, when you look at the capital market, about $7 billion worth of secured funding has been covered by the capital market. That's significantly up from the previous years. And about $18 billion worth of unsecured lending has been done. So you can see the capital markets have stepped up in a big way, even with the limited number of those airlines with credit ratings. One thing that Anup didn't cover, which I think is important in order to also facilitate the capital markets, is of course some type of 1110 concept globally, which from our perspective, and a lot of you in this room have been very active on Cape Town and bringing that into this region. We've seen it in Indonesia, Singapore, India, numerous countries, China. Numerous countries have adapted it and are preparing themselves to have an environment that is basically fundamentally capable of supporting a EETC type transaction. So we see a change in the market. I think there's a realignment. It will be at a cost. And so that's where we need to work with our customers to make them aware of that and get them positioned to basically deal with the challenges coming up in the next couple of years.
Okay, that's interesting. What about alternative sources of funding? What are you seeing there? We are seeing, for instance, on our end, quite an emergence of regional banks, especially in Asia, and to the extent where they don't only look into Asian names, but also over their border, so to speak. So are you seeing anything on your end? I mean, are you talking to them? Are you sourcing out for funds from these regional banks?
Yeah, absolutely. I mean, one of the conversations we had yesterday was part of the reason why the regional airlines have not been as aggressive, I think, in the capital market activity is because they have a very supportive underlying regional bank system. And to that extent, we have seen the Chinese banks continue to fund domestically. Certainly, the Australian banks are doing more this year than we've seen them in the last couple of years. And of course, Japan continues to support the large number of deliveries going into in and Jiao. So I think the challenge from the manufacturer standpoint is taking this established funding base and moving it from the regional support into a much more global network. And that's something that will take time with respect to China, because there's a lot of issues that drive the decision to whether or not liquidity is available, both for international investment, and also finding ways to bring that money from Japan out. I think that's happening on its own because of where the yields are going today. And of course, as I mentioned, the Australian banks have been relatively robust this year. So we coordinate very closely with the banks, as you know, both Western and from a regional standpoint, to encourage them to take advantage of funding assets. I mean, these are great assets, and they have shown to be very reliable sources of credit for the customers.
Yeah. Can you maybe also share with us, of course, I don't know to what extent you can go into the detail of the efforts being done at Boeing to avoid a funding gap? Is there anything, I mean, you proactively then prepare for, and apart from actually talking to banks and other funding sources?
Well, I mean, we spend a tremendous amount of time with the capital market outreach activity. As you know, we have regional MDs for our global sales process, and that also means contact with the banks and contacts with the lessors. And one of the things that I didn't mention earlier is I agree with Anup's comment about the increasing importance of the lessor community. Because of where Basel III is going, because of the higher price of the new ASU, it creates a funding environment where I think the lessors are much more successful than the airlines traditionally have been. So I think they play an important part, which is where we're very focused on our efforts to ensure that for near-term deliveries and also long-term planning, that they're an important part of our partnership going forward. So through our capital market outreach program, we spend a lot of time working issues like, again, Cape Town, working issues with new types of capital markets activity, trying to get our customers familiar with kind of the complexities of doing things different than they have done in the past, which is certainly an important part of what's necessary to bring the capital markets into this region, I think. So we're very proactive in those kind of areas.
Okay, thanks. Maybe the next question is for Brian. The question is more targeted to basically, how are the airlines going to deal with all these aircraft deliveries? I mean, can they really take delivery of them? Is there enough demand? Will they have to change their fleet structures? Will they have to dispose of the aircraft earlier than expected? I mean, we're hearing now a potential new age restriction being introduced into China, where airlines cannot operate aircraft older than 10 years, being effective from 2014. More sale and leasebacks. How do you see that happening?
Well, clearly you can see, and by the way, I'm a good guy. I'm an airline guy, I'm not a banker.
That's why you're in the middle.
I know. I wonder why they put me in the middle. A little bit of a cold, sorry. Clearly there has to be a shift, and you see it today. I mean, it was a revelation for me to see these numbers, to see where ECA and EXIM financing is going down the road. And I guess what scares me is the fact that if you're not the big gorilla airline, and you're not investment grade, et cetera, how are you going to compete with everybody else? Because it really comes down to cost of the fleet and cost of your operation. So with Boeing and with Airbus's support and with the rest of the capital and leasing markets, we really have to change going forward. And there's only one way I can see. It's got to be through the leasing community. However, that in itself could be a challenge also, because no matter what, there's additional cost associated with that. And if you have a AAA rated Singapore airline that's going out there and getting funding at very low rates, then their lease costs, their aircraft fleet costs are significantly lower. And that is the, we talked about that yesterday and the day before, that's the ultimate challenge. To me, this is just equipment, but we've got to find a way, this is our bread and butter, we've got to find a way to work with the markets, and we're not the experts on this at all, clearly. We have to work with the financial markets to find a way to fund these purchases going forward. I mean, it's amazing what you said, 2,000 aircraft coming into Asia by 2026. So I'm sure all the leasing companies in the room, and you know me and I know you, they have to get money somewhere else, all right? So there has to be a shift, and I guess Foster and you guys can help me out. How are we going to do this at a level that we can make money? Because if we're paying 10, 15% charges, let me tell you, the ticket prices are not going down by 10 or, they're not going up, they're going down almost every year. So that's the real challenge for us. How do we find a way, no matter what, to fund these smartly going forward and allow the small airlines to continue to operate? Because what I'm worried about in the next 10 years, there's just going to be about 10 airlines flying around the globe.
Foster, what's your opinion? Because you also, I'm sure that you see a lot of the structuring and fleet management and fleet decision process at airlines.
Right. So, look, I have not been in this industry forever, but I have been in it for about 22 years. So, I remember back when, airlines struggled to make money with fuel significantly lower than it was today. When it was in the $30 barrel range, whatever. Now it's $85 a barrel plus. They find ways to make money. If you look at the shift from $25 to $85, and they are profitable, a movement to more commercial funding based from the ASU perspective, from the ECA perspective, is probably, while I think it's going to be create a certain level of a challenge, is something that was necessary in order for both manufacturers and the countries that support them to ensure that the larger ECA type of funding continued to survive because of the attacks that were on it from the large legacy carriers. So I think moving forward, we have to all understand, and this is an important part of what you're saying, what are the challenges and how do we start to work it? And so one of them has been, this Cape Town, which I spoke about earlier. This didn't start yesterday. I was in the General Counsel's office when we first approved the funds to start the process for that. It was about 22 years ago when I first joined Boeing. So it was something that the manufacturers are constantly looking at. How can we, what is our current financing environment? How can we work to improve it and lower those costs? And certainly a kind of global EETC market should reduce overall funding costs, especially for the lower credits. There's a reason why U.S. carriers, achieve low-cost funding way beyond what their credit rating deserves compared to the larger legacy carriers out here. It's because of the success of the EETC market in the United States. And so what we're trying to do is take those type of ideas and those types of concepts and bring them out onto a global basis in order to kind of address some of the challenge that you're talking to. But it's a partnership activity, and we're going to have to work closely with them on that.
Okay, thanks. Moving on to the next question, I mentioned earlier that we've seen some tension potentially coming up on the lessor side. I think at the moment it's probably very much for the benefit of airlines, right? I'm sure that you can agree with that. So the tremendous amount of competition between the lessors and high volume of aircraft delivering is obviously putting some pressure on lease rates, and the beneficiaries are, for once, the airlines. But is that sustainable? And is that something which we should actually maybe consider as a problem in the future? Having in mind that we have so many aircraft delivering starting next year and then basically for 5 years onwards. I wasn't actually going to ask Anup, but I will. What do you think, Anup, on this question?
Which one?
Question number 3. So, should we be concerned about the source in the future?
Concerned? Well, no, lessors are going to be providing most of our aircraft financing. Why would we be concerned? Let's just take it aircraft by aircraft. The lessors fund, call it 1/3 of new deliveries. They fund it through their own equity, plus they raise debt from the markets. What's that going to be in future? Narrow bodies, A320s, 737s, we're probably already at that 50% point and we've crossed over. Next 3 years, what Brian says about small airlines, could we see the narrow body market being 60% lessors? Easily. Could we see it being 2/3 lessors? Possible. If we go into A330s, 787s, A350s, could that market end up being 1/3 lessor? Likely. 50%? Possibly. The quads, I think, are going to be staying with the airlines. I don't think the lessors are going to be moving into those aircraft. I mean, I'm leaving outside those KG structures. They're not really what I would consider to be lessor structures. And so do we see a possibility of lessors taking 60% of total, 50% plus to 60% of total deliveries? If the airlines don't want to get themselves rated, they don't want to approach the bank markets and public capital markets directly, then I think the lessors will take a majority. And is that a problem? I don't think so. It will mean that we will move to different structures. The lessors they have the flexibility to adapt. They have shown themselves keen to take wide bodies as long as the airlines show themselves flexible with regard to where they want to keep the galleys. They've shown themselves to be flexible as long as airlines are flexible with regard to product configurations. So as we see a little bit more standardization, then I think the lessors will take more and more of the wide bodies. Now, you could also, instead of looking at it being a problem, you could also see it from an airline perspective as a positive. The lessors manage residual risk very well. That problem goes away from the airlines and they can focus on the flying business. I mean, I do also want to address Brian's issue, which is, can the airlines afford this? Foster alluded to it when he compared the cost of oil. Depending on the airline, 6 to 8% of a dollar of revenue is depreciation. 3 to 6%, depending on the airline, is your leasing cost. And for the unfortunate bankers, it's about 2% is interest. So ownership costs are about 12 or 13% for most airlines. If the interest costs go up a little bit higher, it doesn't really move the needle. What moves the needle actually has been the benchmark LIBOR has moved down, and so the airlines have actually benefited in recent times with the LIBOR rates being so low. So the lessors will come in, they'll take away some of the residual risk. The leasing portion of the ownership costs will move into the leasing bucket and the depreciation will come down. I think that 12 or 13% ownership cost from an airline perspective isn't going to change that radically.
I don't want to take away any of the discussion for the next panel. But let me ask you maybe then a bit more of a detailed question. How much do you think are the lessors making now on these new aircraft deliveries? Do you think they still make the typical 15, 18, 20%, or do you think the returns of the lessors are coming down? And from that, are the lessors maybe going to then say, we don't want to continue that sort of process anymore?
I mean, if you look at lessor profitability, it has been fairly consistent. I mean, compared to airline profitability, it's been great. But it's been fairly consistent. Airlines, the lessors have, as a system, as a aggregate, been well behaved. Now, we have heard about RFPs which have gone out, and I remember there was one last year wherein an airline got 40 plus responses. Now, whoever won that deal, I mean, was it congratulations or commiserations? I don't know, because I couldn't name 40 lessors. So I think there's going to be those odd deals, those transactions we all talk about, which lessors have done to build book, and what residual assumptions they made, what financing assumptions they made, I wasn't privy to. But have lessors as a community change their return requirements? Absolutely not. Should they, if they want to continue to raise the amounts of capital they're going to need? No, they cannot change those return requirements. So I think that if there has been the odd deal which has been mispriced, that will get fixed.
Okay. Brian,
I just want to make one more comment. Yeah, you stated the interest rate is not much and the fleet cost is not much. That's true. But when you really get down to the nitty gritty, it's operations. It's the fact that if I lease an aircraft from BOC or any of these other guys, I'm a little guy. So I'm stuck into this aircraft, I'm stuck into the reserves, the engines, you name it. If I buy it, then I can do anything I want. I can go to GE, I can go to CFM, I can go to IE, I can get incredibly sharp deals that lower my costs significantly, right? I can put DER parts and PMA parts in my engine, which are significantly cheaper. So while you're saying that, it's true. But when you own your aircraft, there's much more flexibility, and that cost can be quite significant.
Yeah, I mean, that's a very good point. But I think that flexibility comes at the cost of using a larger amount of equity from next year. So if you get a loan to value of 25%, you're paying 25% of your equity, which has got probably a 25% return, if not higher, for that flexibility, and that's very expensive.
Yeah, and I agree with that, and I think that's the challenge and part of what we're trying to get our customers to be more aware of. Whether or not it's Basel III and the changes that are coming due to shorter tenors and higher costs, which of course drive the airline to put more equity in front of whatever they can borrow, or whether or not it's the ASU with its risk mitigants and also its higher cost, which is going to, again, drop advance rates most likely and end up being with the airlines having to put higher equity. What that drives is a new model for the airlines to basically, fundamentally changes the old model, and they have to review what is the best way to acquire the assets. And my sense is right now airlines continue to basically use their old paradigm, and that they're not quite as familiar as your comments about not being familiar with the new ASU, where the new funding costs are going to be, what that means in their equity. If you go back, no need to go back to the chart, but if you go back to our chart that shows where the funding has come from historically, the equity levels that are now being seen put in by airlines this year are significantly higher than they were just a few years ago. And that trend will continue until they kind of basically rebase how they acquire their aircraft. So that's kind of an important part of what we see going forward. Okay.
And also sort of tell, sort of comment further on Brian's point that the little guy is not actually that disadvantaged going forward.
We shall see.
The issue which you have is, let's say you have a mixed fleet of owned aircraft let's take a 737 or A320, and you've got some leased aircraft. You end up, and let's take PMA parts. So you want to now replace your seat cushions with PMA cushions because they're 1/10 of the cost.
Yes.
If you've got this mixed fleet, you end up going and buying OEM parts because you don't want to have one set of PMA cushions for your own fleet and another set of OEM cushions for your lease fleet. So you end up as a big guy following what you would do for your leased aircraft for the entire fleet. So even as a small guy, if you do 100% leasing your fleet, you'll find that your operational procedures aren't that dissimilar from the big guy who's got even a
Rates are just, from my perspective, phenomenal. So there's no way they're making any money on these aircraft. But that's just because of Kingfisher and everything else that's happened recently. So it's good, you know, we can get aircraft cheap, but at the end of the day, our ticket prices continue to fall. So we've got to find, you're right, we adjusted with the fuel. We've done a lot of things, but there's only so much you can squeeze out of the operation because fuel is fuel, you have to do it.
Well, just a couple of points and then we'll let you move on to our next issue. One is on where the new ASU is going to. One of the intentions was to kind of create an environment where that the legacy carriers, the larger carriers, for example, in this region, the Cathay Pacifics, the Air Chinas, the Koreans, Singapore has not, but at least not with US EXIM Bank. But is to create an environment where we're seeing that they are now not funding low-cost ECA-supported funds. And so the new ASU rules actually create a higher cost, relatively speaking, for the credit rating than they would otherwise have achieved underneath the old LASU rules and certainly the previous set of ASU rules. So there's an attempt to really kind of restrict or redefine how they can access those funds, which in a way levels the playing field, if you will, for the smaller carriers, because although they will be subject to more risk mitigants than, say, a large carrier, the very front-end element, which is the access into the whole ECA process, gets balanced out. So that's one thing. The other thing I think is important, and I'm sure the lessors will talk about this over the next few hours, is at least my perception, having spent some time with leasing companies in the last couple of months, is they're seeing a lot more volume of deals, which gives them a lot more flexibility to basically try to push some of their terms, especially for a new kit, sale and lease back. I also think that, you know, what we saw not too long ago was a lot of short-term leasing, even on narrow bodies. I think there's a fundamental shift that the leasing companies realized that was a painful experience to have 3 to 5 year term on even narrow body aircraft, so they're looking for longer term. So at least on some of the responses that we've been involved with working with our customers and our leasing companies, and I'm sure the leasing companies will go into this more, we're seeing them adapt to the environment, which I think is good for everybody in the long run.
Okay, good. Well, it's definitely a good introduction for the next panel discussion. But as we have seen and heard, the lessors are a very important source and probably in the future even more so. So therefore, I thought that's definitely an area which we should address. Slightly more dry topic, regulatory hurdles, Basel III. Anup, dry topic for a more creative person.
Regulatory hurdles, I mean, it's only bad news. It's only bad news for the banks. It's only bad news for the airlines and the lessors. Basel III will have, as you mentioned, you know, liquidity costs. There's going to be match funding issues wherein the banks are going to be forced to have long-term funding in order for them to have long-term lending, and that's going to come at a cost. So it is going to push up cost of bank financing. Will it affect the Asian banks who are going to implement Basel III more slowly? I think that the Asian banks have never been the ones who have been price makers in the aviation markets. So, yes, I'm sure that, you know, from your face, you have been stunned on a couple of responses where you've tried to question whether the bank who won that deal won it at a price they should have won it. I don't think it was a regulatory cost of capital which made them underprice a particular credit. I think it was fundamentally their view that this credit was probably quasi-sovereign, whereas you saw it as being purely commercial. So, as the Asian banks haven't been price makers here, I think that they will move pricing up as the international pricing goes up, either because the regulatory hurdles affect the international banks and the EXIM and ECA pricing has gone up as well. So I think that the Asian banks aren't going to drive pricing down based on some kind of regulatory arbitrage. There are also a number of Asian banks who have started to think about Basel III and implement it early, at least for longer tenor financings. So I haven't seen Asian banks come out there and say, hey, we've got this window of opportunity, let's start making these enormous loans to finance aircraft. Not at all. And I don't see Asian banks enthusiastically signing 15-year aircraft finances. So I've instead seen Asian banks want to pull the tenor curve lower and shorter and fund shorter term deals, and they're ideally suited to do the PDPs, but they're also ideally suited to do transactions which we've seen to fund the equity portion. So we've seen them do junior loans, 3-5 years, because they're more comfortable with the credit than the international banks are. So I don't think there's going to be that much of an arbitrage. I think there's going to be the unusual deals which we're all going to talk about and say that XYZ Asian bank got there because they didn't have the same constraints that the international banks have, but I don't think that's going to be the driver of the market.
Okay. What could the effect be, let's say, more on a global basis on capital markets? Because if you think about it, regulatory hurdles, Basel III, whatever the others are called, I don't remember actually too much, they are creating cost. Capital markets, the funding cost of capital markets is effectively zero. So there should be a substantial price differential, positive price differential for capital markets products. But as we mentioned earlier, there are other issues like ratings, like the whole process of, probably also jurisdiction, legal analysis, Cape Town, Foster, you mentioned that you're making a big push into that. But would we see also from that angle a more active capital markets activity basically gain momentum in Asia?
It's a very good point. I don't think any of the fund managers would say that they have a zero cost of capital.
In theory.
And if your pension funds were invested in those money managers, you wouldn't want them to think that way too. What we would like to see from an Asian perspective is we would like to see the Asian investors who are flush with capital to take a bigger slice of aviation deals. And they will do so if we structure them in a manner which is attractive for them. So if Asian airlines and Asian lessors were to come with well-structured bond products, I think the Asian investors would be very enthusiastic. So I think the amount of Asian capital which could come into the aviation industry could multiply if the products were provided by the Asian airlines and Asian lessors in the form which the investors wanted to invest. Whenever you take a bond product, the right tenor, for an international lessor to the Asian investors, they take a big slice of it. If we were to take an Asian lessor to the capital markets, the Asian investors would have the biggest share of it. If we were to take a well-known Asian airline to the capital markets, the Asian investors would take a majority of it. So I think if we provide them with the right product the Asian capital market investors will be there, and they have the liquidity, and they will participate, and maybe that liquidity will drive pricing to a more efficient level.
Foster?
Yeah, I mean, I think that's the message we've been repeating today, that as a lot of the elements we talked about, Basel III, the new ASU, push pricing up, it creates an opportunity for other types of investment forms. I agree exactly, totally with Anup. It's about pricing, it's about structuring. There's a tremendous amount of capital available in this region, and it's only that amount is only going to get larger. And so it's with putting the lessors and the banks together and the capital markets people in order to think about what's the best way to attract that structure and get it into aviation financing. But that's a function of time. It's just simply as spreads move, and they are moving in that direction, it will attract. It will attract that money. And I think this area is going to be a tremendous funding base. So, and we're seeing that already. I mean, you see some interest from the Chinese. Certainly the Japanese, again, have entered into the market a lot more aggressively than they were in the past. So it's starting to occur, I think.
I mean, we're seeing also in Singapore the Singapore Business Trust, which is a capital markets product actually aimed at equities. It has not yet taken off, but there are actively two projects being pursued at the moment, and it would be definitely quite a milestone if that actually takes off. It's a portfolio type of financing for the source primarily, or anyone wanting to basically refinance or sell aircraft in the equity markets. But that's also one of the other alternatives. It's not so much focused on airline-specific financing, but it's definitely also another way of financing aircraft portfolios. So that is something which is happening right now. The equity markets at the moment are not really supporting yet a major deal, but the two projects are basically ready to go, as we know. So that's one part. I think what you are referring to, Foster and Anup, is more an airline-driven bond product, which is basically an airline-secured bond, which yeah, I agree, it would be great if that is possible. Maybe the last question for Brian, just to, I think it's on the next page, which is really to see into to try and see into the future. I mean, we have all these LCCs ordering more and more aircraft. We've seen the slides before, massive increase in their fleets. On the other hand, general huge delivery streams also from other airlines. Do we expect any tension really in the market? I mean, have airlines overordered? Have they maybe done their math not entirely correct? I mean, is the market really there to take delivery of all these aircraft? Will airlines suffer? It is the most expensive asset on the balance sheet, and if you get it wrong, it hits you.
Well, it's a good question, but not an easy one to answer.
Yeah.
I don't have a crystal ball, but from my perspective, there's a lot of lift coming into this region, which will affect every carrier. You have Lion Air and AirAsia. What's the order book now? 800? Something in that range. The planes are going to come in, and they have to go somewhere. Is there tension? There's massive tension. There's massive competition. Somebody made a comment, I think, yesterday about Europe, saying in Europe you have secondary airports. Well, we don't really have secondary airports, maybe a few here and there. So there's really no market segmentation. So we're all competing to get that same passenger. And it doesn't matter if you want to call that a business traveler or a leisure traveler. You still want that passenger, and you want them in your seat. So clearly there's massive tension. Everybody's going to continue you have to be on your toes, commercially and operationally, and you have to have the right equipment in the right market today. So yeah, I mean, it's just going to continue to grow. I see network carriers have to change like they did in the United States. If you're aware, Delta, United, are they low-cost carriers? Do you pay for baggage in Delta Airlines? You bet your butt you do. It's $25 for the first bag, and I think it's $100 for the second. You pay for the meals, which are atrocious. So You've seen that shift happen in the United States. The United States carriers can't make any money, even though they have 95% load factor, because they're flying old equipment. They're flying 20-year-old 757s. Sorry guys, I'm not picking on Boeing, but your fuel burn is through the roof. They're heavy equipment. But if you were to bring in the new equipment, you could clearly, like we did before at Cebu Pacific, you took a DC-9 versus a 319 or whatever, and you can see the massive savings in the operations and the fuel burn. So new equipment's great. I love it. I love the warranty period. You get high utilization. But everybody has to, you know, we talked about it yesterday, Singapore Airlines. I used to work for them for a little while. Are they a low-cost airline? Well, in their operations, they are. So they've shifted to that model. They do very well with their joint ventures. They do very well in many areas. And I think all of the carriers who were the flag carriers before better realized that if they don't change their model, if they don't change their systems and their people and everything else, they're not going to be in business in the next 10, 20 years. My humble opinion.
Foster, you are also involved in these forward projections, I'm sure. Have the airlines ordered what they should be ordering, or?
Yeah, Boeing marketing's always calling me to ask me my opinion. Look, while there are, if you look at the long-term graphs that all the industry uses, it's a fairly steady growth projection that has been predictable and correct. And I think that will continue. The challenges are when we have exigent circumstances which push demand out of sync with its trend. And you know, that's when we have interesting conversations. Those are the opportunities for interesting conversations. The fact is the demand matches up with production in the long term. And from a manufacturer standpoint, we need steady production in order to pass that cost along to the customer. So what we can't be doing is moving our production level up and down because of a 1 year or 24-month change in the operating environment or the financial environment. So that's a long way of just saying that we think the demand is there. It's certainly extremely strong. The best demand that any manufacturer will forecast is for Asia. And we think that we are building the right products to be successful in this region. I think, Brian, you're absolutely right about the benefits of new kit and operationally making you successful. I mean, part of the reason why the airlines are successful at $85 a barrel is because they can bring a 787 or a new gen with all its efficiency or a 777-300ER into their system and operate extremely profitable and quick turnaround on the assets. So there's a lot of room for new aircraft. Now, one of the issues we didn't talk about is, and I think we were going to, was whether or not that means people are going to accelerate moving out old aircraft. And I don't really think that's going to be the case. I do think there are about 3 different issues that impact that particular issue. One is economic obsolescence. I think that particular issue, probably about a 2 to 3 year shift on the average life. So instead of being 25 years or a little bit more than that, it will probably move down into the low 20s. That would be the impact. One is regulatory issues, which we kind of touched upon briefly. While that's disruptive on a deal-to-deal basis, I think from an industry perspective, not really as important an issue. So in the long run, and the last one is, of course, the flight to quality, capitalist flight to quality, which has occurred, which may push out the type of assets that can be financed. And certainly we've seen there's been a push to tier 1 or 2. But ultimately we think in the long term, you know, the assets will hold their value, the economic life of it, the useful life of it will probably be reduced by 2 or 3 years. But still good long-term investments for customers. New kit will continue to give them the opportunity to operate profitably. And we think the numbers are, give or take, roughly where they should be.
Okay. Anup, one provocative question for you. If someone comes to you and says, well, can you finance an aircraft via Asia, but by the way, they have more than 250 aircraft still outstanding for delivery. What can you tell your credit department?
See, when someone's got a delivery schedule which goes out to 2024, and they've got 200 aircraft, well, that may actually be okay. If the Asian or global markets was just one airline, and I look at the delivery schedule which they've got in 2013, 14, and 15, and so those 250 aircraft are all going to be delivering in the next 3 years, I have a credit issue, and I think the credit committee will have an issue too. And I think that's what we have as a problem. I completely agree with Foster's and the Boeing and Airbus 20-year studies. I mean, they look great, but it's these spikes that we have a problem with, and we're now in one of those spikes. And unfortunately, it's a 3-year spike. So if you ask me even to look at an 8-year cycle between now and 2020, I think we've got the right number of aircraft ordered and the right number of deliveries coming in. The only problem is they're coming in the next 3 years, a lot of them. And so that's going to be the problem. This industry is horribly cyclical. And it's horribly cyclical because we get the supply-demand out of sync. We all order during good times and they all deliver in bad times. So it exacerbates the fact that we also are in a global recession. So we do have an issue. Do I feel that the airlines are going to be going to the manufacturers asking for deferrals? I think it's already started to happen. I'm just surprised that it's not happening in larger numbers.
Thank you. I think we have still a bit of time left. Should we ask the audience for some questions? Any questions? Not Robert, you're not allowed to.
Thanks for a great discussion. There seems to be one thing missing though. Equity for airlines. We seem to have talked about debt and leases. This industry needs equity. How much do you think it needs, and where's it going to come from?
I think very good question. Who should say? I think we should ask Brian.
Oh my God.
Look underneath the bed.
Yeah, it's, Bob, it's a very good question. When you look around, unless you're talking about the big airlines, it's tight out there. Where are you going to get the cash from? It's hard enough to meet our operational needs every month. So I'm going to have to throw it to these other guys, because from my perspective today, I think you're going to see more and more airlines going, like you said, 60, 80% leasing. And that way you don't have to have the equity up front, but it's a challenge either way.
When we started the conversation, embedded in the numbers that were shown was basically an increase of about 4% responsibility of the airlines from an equity perspective, year on year from last year. And quite frankly, I would probably say that's going to be slightly higher for next year, especially when the new ASU rules are in effect and the grandfathering clauses are no longer in place. One, it will have to come in part from the airlines, but as pricing gets pushed, I think some of these capital markets and some of these type of investment opportunities will become more attractive, and we'll see them entering in. We already see it to a certain degree. And so that market is going to be an important part to be tapped. Now, how quickly can it be brought along and what's the depth of it? I think that's what we're going to see over the next couple of years.
Public equity markets are open, but for very, very few airlines. They're open for lessors because lessors have shown that they are more consistently profitable over a cycle. But the airlines have demonstrated as a group the opposite. And they've continued to show their cyclicality, and that's going to get worse. So the airlines which have raised equity over the last 5 years have basically fallen into one or two camps. They're either low-cost carriers, and typically the ultra-low cost, or they've been emerging markets, faster-growing airlines. So they're the ones who've been able to raise that equity. What are they going to do with it is they're going to invest, and hopefully invest profitably. And they're going to take market share from the airlines who have not been able to generate cash profits, and will then have to shrink. So what happened in Europe will repeat in Asia, and it's the only surprise it's taken some of the larger carriers so long to figure this out. And I think the next 2 or 3 years, which are going to be very testing, are going to make this issue an even bigger one as they start taking capacity which they can't profitably deploy. And what we did see pre-crisis of very large and high market caps, we've also already seen them come down. Equity values for the airline sector in the last 12 months have come down 30%. So the airlines do have an issue, which basically, if we bring it back to this financing discussion, would mean once again that the lessors will take a larger share because they can raise that equity and they can raise the debt.
Thanks. Any more questions? Peter?
I wanted to come back to Anup's statement of the gap, which I don't think there is. If you would take the bar chart and not make a global bar chart, but a bar chart for regions, like how does it look in the Americas, Asia, Europe, and so on, I think there is a significant change of shares between, and like there is WTCs in America coming back using capital markets. Using that, I don't think there is a gap at all. Go to the Asian market, there is a lot of capital available for Asian products. Go to Africa, go to South America, there is capital around to finance the leases. So I don't think there is an issue there on new capital. I would be much more concerned, and Foster touched on it, used aircraft or let's say the blend aircraft running out of production. A320s, 73 new generation with the new build coming along. We see lenders not having the appetite for those airplanes because their life cycle is coming to an end. And I would see that much more of an issue in terms of there is maybe liquidity available, but at a much higher cost. And how would the airlines in those regions be able to afford it? Because as Ryan mentioned, the ticket cost, well, ticket price actually is going down. So how would you see this in terms of the next couple of years, the lending market being able to, or the financing market maybe, to deal with that issue?
Well, and it's a good point, Peter, on the last issue you mentioned on the used equipment market. BBB, for instance, is very active in that market. And what we've seen over the last 18 months or so, and that's primarily driven by the, again, huge amount of new deliveries coming into the market and then basically pushing lease rates down on new but also used equipment. You still probably would find a willing buyer, willing seller on used equipment, but you don't find a willing financier. We are very often maybe there's one more PK who would do this, but then the parameters may not work for whatever reasons, so the trade doesn't really happen, and then the used aircraft don't actually get really traded, so they are stuck with the primary or the initial owner. So it is an issue, and I can see it only becoming a bigger issue. I agree.
The end of production, the A320 CEOs, the 73 new gens being delivered, say, in the next 2 or 3 years, the lenders would see this maybe not as a used airplane, but an end of, let's say, production cycle, despite being a newly produced. So I think for this segment too, you would want to look at a new source of capital, because the classical commercial debt market has just not the appetite for it, in the similar sense that the TECAs and EXIMs will support the new builds, but not the, for example, would an ECA having a choice between an A320 CEO and an A320 NEO still support the A320 CEO? Maybe not.
Yeah, probably at more conservative terms. So I think we have one more question with Paul.
Hi. Since this is a sourcing financing segment, I thought I'd just ask about Islamic compliant financing. I mean, we've seen some transactions in the past few years. Aviation, some Sukuk bonds being issued, and not to preempt another conference in Dubai in a few weeks' time organized by Boeing. Why have we not seen more Islamic compliant financing in the market? I understand that pricing is not more competitive than straight commercial debt, but if we are entering into a world of liquidity, of a world with a liquidity gap, would Islamic financing fill that gap, and in what form?
I'd rather hand over to Anup.
It's a great question. We've always said that the aircraft asset would be an ideal asset for an ijara, an Islamic compliant lease. However, the Islamic market has seen so many other products which have been shorter tenor, that those are the products which the Islamic investors have tended to be focused upon. So the Islamic investors do tend to like shorter tenors. They like these 3-5 year tenors. Now, when the investors tell you, well, why can't we do a 3-5 year aircraft financing? I think it comes to Peter's point. Once you do a 5-year aircraft financing and have a giant balloon, and then you come to refinance that balloon, it's a problem because it's now a used aircraft, and a whole bunch of lenders who would be excited about shiny equipment aren't that excited, even though the equipment doesn't have a piece of rust on it. When you try and move the Islamic investors to start thinking 10 years, you find that a number of the investors disappear. And their yield expectations are fairly high, especially in US dollars. So the number of deals which get done are actually quite small. You know, you've got the odd one now and again. When you turn that and you give the Islamic investors something allied to the aviation industry, for example, airports. For example, Malaysia Airports Berhad raised 2.5 billion ringgit in sukuks when they wanted to finance the new low-cost terminal. So the Islamic investors have shown themselves to be very keen on infrastructure assets, but when it comes to amortizing aircraft secured debt, they don't tend to be as enthusiastic and as efficiently priced as the commercial banks.
All right, thank you. I think that's probably now time for a break. Thank you very much to the panelists for a good discussion, very good discussion, and I hope you enjoyed it. Thank you.
We have to give them a class.